Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. Good morning. Welcome back to another live stream. Hope you're doing well. Happy Monday to you. And kicking off a pretty big week. Well, I should say it's a big week, but it's nowhere near as big as some of the weeks have been recently. We've had some pretty back-to-back wild ones out there with, of course, Fed meetings, the CPI reports, the NFP reports. It's been a really highly active period in the markets in the last few weeks. And despite that, what's kind of interesting is that despite that, we haven't seen any massive movements. We have seen some movements, don't get me wrong, these moves over here, but recently, chop, chop, chop. If you're taking a look at the NAS or the S&P 500, it's been pretty dang quiet. Dow Jones flat here today. NASDAQ's up, leading higher here this morning. Looks great. I am long the NAS, so of course, I'm never complaining if the NASDAQ's going higher if I'm in it. If I'm not in the NASDAQ and you hear me talking about it, I'm usually complaining about it. So today, no complaints. Hope you guys are doing well. Ooh, that is some hot coffee, fresh out of the kitchen. Okay, so let's talk about some stuff here in terms of this week. What can we expect? Well, let's just do this week's calendar for a second. So we have the biggest things that I've seen on this radar here for the week are going to be the ECB reporting their interest rate decision on Thursday. They're expected to come down to 3.4. Actually, I think that's staying flat, right? Keeping it flat? No, it's coming down. 3.65 down to 3.4%. There is expected to be a rate cut from the European Central Bank. That's happening on Thursday, potentially. At the same time, core retail sales, unemployment claims happening on Thursday of this week as well. So you've got this Thursday period looking to be the most impactful, I would say. Press conference, of course, happens after for the ECB. So we'll see how it goes. Is it a bank holiday in the U.S.? I think it is, but the markets are still open. So, stock market's still open. FX world is pretty much always open. Futures still open. So also, guys, I just spoke to my team behind the scenes a little bit here. I think we're going to plan on live streaming on election night, which I think is going to be interesting, to say the least. But I do think we'll get some good, we'll have some good fun times. If you guys would like to watch the election with me, plan is to report on what's happening in the election, strictly from a trader's perspective, trading perspective, what it means for the markets potentially. So that's going to be, of course, November 5th, a couple weeks away. It's crazy how fast that creeped up on us. But yeah, planning on doing that. So let's take a look here at a couple things. Gold here this morning is just slightly lower. It actually gapped lower over the weekend. I don't know if you guys saw that. We had a gap lower and then shot up and now coming back a little bit here. Silver's down. I'm looking at a 15-minute chart. Copper down, oil down. Part of the reasons here, I believe that there was some Chinese economic data over the weekend that the market did not love. So we'll be talking about that a little bit here. Commodities lower this morning. Oil, oil being kind of one of the bigger ones, copper as well. Seeing some sell-off in this. Look at copper sell-off. And remember that the Chinese economy is so integral to the global one and the demand or supply of commodities. So yeah, it'll it'll be interesting to see if the Chinese economy is going to sort of bottom out and start strengthening again. It will play a big role in strengthening commodities. But here's the thing with commodities going into 2025, right? I've gone back and forth on this thought. Where do I think gold, silver, copper, and oil, where do I think these things are going next year? I'm going to pat myself big time on the back here for a second. One of my biggest calls here this year has absolutely been gold bullishness. I've been very, very correct about that, except for the fact that I was very wrong in magnitude, right? So as a trader, direction and magnitude are both important. So what do I mean by that? Well, direction wise, I thought it was going up. Lo and behold, not only did it go up, where I got it wrong was the magnitude. I was off. And I think a lot of traders and investors were. I don't know that many people thought gold was going to rally 35 whatever percent this year. But this year, my forecast, you can go back and watch it on my channel. We did a forecast video. I do them every year. I did a forecast video about what I thought for 2024. And in that video, I discussed heavily gold and why I thought gold was going to continue to go up off of the Fed cutting rates this year. That's been very correct. Where I was incorrect, do you know what my target for the end of the year was? 2280. So I was right in the direction. So here's the beginning of the year, right? Beginning of the year is right there. I was totally correct in the direction, but the market surprised me and many other people by doing just about double what I thought it would do in the whole year, which is crazy. I thought gold might see a 15% move higher, 12 to 15% rally, which for gold is usually pretty big. But you can see gold has been on just a one-way path to the upside. And gold is taking down names right now. A lot of people probably blown their account trading gold this year, trying to short this thing as it just continues to go higher and higher and higher. Election stream. Yeah, I think it'll be fun. I'm going to do my absolute very best to keep my opinions out of it. And actually, it's not going to be as hard as you may think. I don't have like a super strong political stance. Like I know that's like the easy thing to say. That's the cop-out answer, but it is kind of the true answer. Like I'm not really hard set on, I think, the election is going to be the election and people are going to freak out about it. The markets are going to move a lot. That's really why I will be live streaming the event, because it will be important to markets. Contrary to general Twitter and Instagram belief, I don't think the markets are going to crater on either one of them being elected. Everybody loves to say that. They'll say, oh, if Trump gets elected or if Harris gets elected, this is what's going to happen. It's going to be horrible or it's going to be amazing. I think people overestimate the abilities of the president in terms of corporate America, fiscal policy, or monetary policy from the Fed. Like those things are way more. Secular trends in corporate America are more important, like AI. Those things are not dependent on the president, but those are the real forces that have driven this market to where it's at. When I'm saying this market, I'm talking about the NASDAQ, which is hitting not an all-time high, but a recent high. And I actually need to trail a stop on this one. So I am long NASDAQ on QQQ, which is an ETF that tracks the NAS. I won't be voting unless Trader Nick is on the presidential poll. Well, then you will never be voting, my friend. If you're an American, you should vote. I know who I'm voting for. You guys ready? And you know where I'm going. You know where I'm going. 2 letters. J. P. JP for president. Jerome Powell. Kidding. Kind of. I don't know. I feel like he would make a pretty good president. So yeah, the NASDAQ's making a push. I do want to trail a stop on this one. Where am I going to trail a stop? I think I'm going to trail a stop just below this structure low here off the 4-hour chart. So we've broken through resistance here real nice. Strong 4-hour close. I woke up this morning and I was like, heck yes, that's the close we were looking for all last week. So I think what I'll do is I'll probably take this stop loss, put it right there. Look at that. NAS is just going crazy here just to kick off the week. So yeah, we'll see. So if we take a look at the dollar here this morning too, let's take a look at this. Also, by the way, guys, we got 465 people. Sorry for the low energy. I actually had a really weirdly stressful weekend. I pretty much worked all weekend, which I do usually work like a piece of the weekend. I don't usually work the whole weekend, but we just have so much stuff in the works right now. So my energy levels are a little bit lower this morning. So I apologize for that. But yeah, we're looking at when I say work, I'm talking about like content, and our website needed some fixes and just boring day job stuff. I do have a day job, which is A1 trading is my day job. But anyways, dollar index looks real good. I actually think that the dollar index may have, I've said this before, I think the dollar index may have bottomed out for 2024. Things can change, but here's the thing. We've had really solid jobs numbers. Inflation came in a little higher than what was forecasted. And you've got this trend here where, yes, the Fed is going to cut rates. But remember, it's a race between different central banks. In this case, for dollar strength, you want other central banks. Let's say red. Here, the yellow is the Fed cutting rates. Like, let's say this is the Fed funds rate. Fed funds rate. Okay. Well, the dollar index doesn't just look at this. The dollar index, how do you value the dollar? You value it based on what its peers are doing. So what if the rest of central banks are cutting at a faster rate? Then suddenly, let's just put others for other central banks. So if the Fed funds rate is coming down, but it's coming down slower than the other central banks, which currency is going to be stronger? If on average, other central banks are cutting interest rates at a faster pace than the Fed, then it's sort of like who's taking more damage sooner? Like, which horse do you want to bet on? The one that's tiring sooner, or the one that still has a lot of energy? And in my view right now, the reason the dollar may continue its upward push is you have the Fed funds rate coming down, but with this recent strength in some of our indicators, right? NFP, CPI, these things are signaling that perhaps dollar strength could be relatively better than other currencies. Does that make sense, guys? Do me a favor. Type yes in the chat. Type yes in the chat. That makes sense. Bro, why is it you never take trades? Why is you never take your trades on the live stream, but always take entry, then go live? Ding dong. That's a great question. The reason, and I'm not calling him a ding dong, his name is legitimately Ding Dong. The reason I do that is because I'm a swing trader, and I'm not a day trader. So like when I'm trading on these live streams, I am not like taking an entry and then like 15 minutes later trailing stops or taking profits. I'm not a day trader. I'm a swing trader. So Dexter says no. Dexter, I gotta come back and talk about that in just a second. Can you explain once more? Yes, I will, guys. Don't worry. We'll talk central bank stuff in just a moment. But to answer the question, why don't I take trades live? I do take them sometimes. I just don't take that many trades. If you watch my stream, you will see me take trades eventually. Sometimes I'll take it. In fact, I need to trail this stop. So if you want to see me take a trade, I will trail a stop right now. I've got to trail this stop I mentioned earlier. So I'm going to put my stop just below good till canceled. Let me also update this within our VIP room. And if you want to see the trades when I'm taking them, the best way to do it is genuinely to join the VIP group. That's the other reason. The reason I don't do it all the time on live streams is because that's a paid service. And, if I'm being candid, you get what you pay for in this industry. We share real trading results. So if you're interested in getting trading signals, if you'd like to see what we're looking at, what we're trading in full depth, The other thing is when I take trades, it's a lot for me to continue to live stream and explain everything, but also do a write-up for members. So I usually do it off camera because it is just a lot easier to collect my thoughts and write things out. That being said, I'm going to trail my stop loss here. And then we'll talk about central banks. Don't let me forget that. I will do that because it's a really important topic. And we have to make sure everybody's on the same page with that. Okay, so I'm trailing my stop loss here. Trailing stops off the 4-hour chart. Taking a picture here. Okay. Okay, stop loss. Stop's been moved to 220,119.4. Trailed into profit. NASDAQ 10 plus days ago. NASDAQ trailing stops after we broke through structure highs on the 4-hour and daily chart, locking in stops just below 4-hour chart support zone as seen in the picture attached. Nice runner. Okay. Going to put that in the group, make sure that looks good. 20,000, make sure the number's correct, and we are good to go. Okay. So yes, if you guys would like to get those notifications when I actually take trades, when I'm updating them, everything about what I'm doing in the market, we'll drop a link here in the chat. In the chat right now, if you'd like to speak with a member of our team, we will get you hooked up with a nice stream discount. Send us a direct message. If you're serious, we are only looking for serious traders to join the group. You can join the chat room. We did a coaching call yesterday. I did a call, which I haven't done in a little while, but I haven't done one in a little while, but it was a lot of fun. And got to answer some members' questions. So I'll probably do more of those. I actually really enjoyed doing a smaller circle where I could answer some questions with members. I do plan on doing more of those. If you guys would like to join the Discord, the VIP room, send us a direct message. And again, we're looking for traders who are serious, who are trading things like gold, indices, commodities, currencies. We trade a little bit of everything. You also get access to Frank's trades from the stream if you know Frank well. He may be joining us here today. We'll see. So on and so forth. So join us if you have not already. Okay, so also last thing is if you guys would like to join the free version of the Discord, maybe we can drop that link as well. We do also offer a free version. The free version, you don't get access to the signals, but you can read alongside like our analysis. We'll post like chart analysis pretty frequently. Frank and I are both doing that. So how much is your risk per trade? Good question, Nelson. It's pretty personal what you choose to do because your risk tolerance is very much up to you. For me, it depends. I have two different strategies that I run in the same portfolio. I have an option selling strategy, and I have my momentum trading strategy, like this NASDAQ position I just discussed. So for me, this trade is a much larger size, but the NASDAQ, so I risked on this particular trade. I don't have a set risk. I have a dynamic risk. The reason I have a dynamic risk is because different signals being generated from my system, the Edge Finder, have varying levels of scores. So if something has a higher score, I may allocate a little bit more risk to the trade. For me, there's also a variation of how much cash available or margin available do I have in my trading account at the time that I'm taking a trade. If I have a bunch of positions on already, I'm going to take a very smaller size trade because I just simply don't have as much cash in the account. I don't trade on a lot of leverage. I typically go for lower gains than perhaps most of trading YouTube and Twitter, but I personally have a lower tolerance for wanting to, have big drawdowns. So like I exchange smaller drawdowns for much larger, for smaller gains. And I'm okay with that. So that's personal choice. How much you choose to risk per trade is actually way more complicated than it may sound, depending on, some people just have like a really simple rule, like, oh, I risk 1% per trade. But for me, I have what is called a dynamic amount that I risk per trade because I'm having different, think of it as like, if I get an A+ setup, I might risk up to 2% but it might be more of a swing trade, a longer term hold, etc. If it's just a lower tier trade, but still worth taking, I might only risk 0.25%. So I have a pretty wide range. I could risk anything from 0.25 to 2% on a single trade. So my dynamic risk per trade concept is a bit complicated. Maybe I'll do more of a video on it, just dedicated to that topic in the future. In the VIP membership, do you have a trading course on how to use the Edgefinder Pro? That's a great question. And to answer it, here's a great way. The course for the Edgefinder is completely free. If you would like the course for the Edgefinder, here's how you can do it. We'll drop the link to our trial application. If you apply for the Edgefinder trial, it is not a free trial, but if you apply for an Edgefinder trial, you will get a free course on the Edgefinder right now. So if you trial the Edgefinder, use this link. It is not free to try. People sometimes get upset about that. We charge a fee because we spend time with each customer, and we also had people they would just change their email every week. So they would just get free trials over and over and over, but we have added a small fee to the overall cost if you're serious about the trial. Also, even if you're not willing to pay anything, that's totally cool. If you'd like just to get the Edgefinder course, just fill out this application, and in your email, it should send you a link to the Edgefinder course material. Okay, so I want to come back to that. I promised we would discuss central banks a little bit more. So let's talk about it again. Currency traders, gold traders, this is an important topic for you. If you're an index trader, this is something you should know, but it's not nearly as critical. What I'm about to talk about is huge for FX and gold traders, or silver, okay? When we look at the dollar index, how does the dollar, I know a couple of you guys mentioned that you're still a bit confused on the dollar strength. Here's an example of what might be confusing. Rate cuts in the United States. Most of us are on the same page. Okay, if rate cuts happen for the US, the dollar should go down, right? Wrong. That's not the only variable, because currencies, as you know, trade in currency pairs, right? The relative performance of one currency impacts the others. So let's break this down. Why is the dollar index going up even though the Fed is expected to continue cutting rates? Here is how that function works. Let's first talk about the DXY, the dollar index. How is it calculated? The dollar index is a instrument that looks at essentially all the other major currencies, like the euro, the pound, the Australian dollar, the yen. So the DXY is looking to in order to give up a price on currency. How do you put a price to a currency, right? That sounds kind of confusing. Well, it's all relative to the strength of the other currencies. So when you look at the dollar in isolation, you're really looking at the dollar in relation to the pound, the euro, the Australian dollar, etc. So the dollar index is trading higher even though the Fed is expected to cut rates. Well, here is why. It's because other currencies are also seeing rate cuts happen in their countries. We have this week, the ECB is expected to cut rates. The Bank of England is expected to cut rates at a point. The Bank of Canada has been cutting rates pretty aggressively. So let's go back to our drawing here. So remember how, yes, rate cuts are generally speaking bearish for a currency. Let's say that this yellow line is the Fed. This is the Fed and their projection of interest rates. Okay, we're looking at an interest rate graph over time. Just pretend that that's what we're doing. I'm gonna draw this out for us. So we have the Fed is expected to cut interest rates over time. So we know that the dollar index should go down, right? Well, not necessarily. The dollar index could actually go up during this Fed cut because it's about what other currencies are doing too. Remember, that's how the dollar index is calculated. So what if other central banks cut rates at a slower pace, right? If this is our other central banks, like the ECB, the Bank of England, the Bank of Canada, if those banks are cutting their currency's interest rate slower, then what does that do to the dollar? Makes the dollar look weak, right? Because then it's like, oh, the Fed is cutting rates. Get out of the dollar. Let's go to these other currencies, because those other currencies, if we buy bonds there, if we buy that currency, there's more money to be made holding on to those other currencies. So why would I want US dollars? But that's not the case that we find ourselves in right now. Okay. Right now, a couple of months ago, it looked like the US data was coming in real weak and that the Fed was going to cut faster than the other central banks. That's why the dollar index was trending lower. This is why fundamentals are so important, guys. If you understand this, you understand why currencies are moving. It's not just squiggly lines on charts anymore. It's actual real world stuff. So let's reverse this now. Let's say that we go back to this and we said, okay, what if this is the Fed? This is the projection for rate cuts from the US. But then what if the other currencies, which will mark in red, are expected to cut rates faster, right? So if this scenario happens, it's kind of like, okay, the other central banks are cutting rates faster. Maybe their economies are weaker. A weaker economy makes that currency less attractive. Cuts in that economy's central bank rate are bearish for the currency. So in that case, look at this dynamic, right? The US is cutting their rates, but they're cutting their rates at a slower pace than other central banks. In this case, you can have dollar strength even though rate cuts are coming for the Fed. Does that make sense? Do me a favor, if that helped, type yes in the chat. Just let me know by typing yes. I know this is a bit of a complex topic at first, but once you kind of get it, you're like, oh, so this is just like a race. The race to the faster rate cuts are going to be more weak. The slower rate cuts are going to be more strength for that currency. It was a little bit easier when in 2022, it was the opposite way. When everybody was the race for rate hikes were the opposite effect. Let's say that this was other central banks, right? If you're talking about rate hikes, but this was the Fed, right? Do you guys remember? Some of you guys might have been trading. Some of you guys might be more new than that. But if you were trading during 2022 and the Fed was hiking rates much faster than other central banks, the dollar was a beast that year. And it was just a wild year for the US dollar. So we have to understand these topics. These are really important. If you're going to call yourself a macro trader in any capacity, you need to understand how central banks and their decisions to hike and cut rates will impact the charts, because those trends are some of the most powerful trends in the financial markets. Okay, I'm glad I'm seeing a lot of yeses. Thank you guys. I'm glad that helped. I'm glad that even though I've been talking about this subject for a very long time now, I mean, for me, my life, I think I've talked about the fundamental side for the last 4 or 5 years, or 3 or 4 years, something like that. Anyways, I've gone over that topic like 50 times, but every time I do it, it's like a good refresher for myself, because this stuff is a bit complicated. So it's understandable if you need to watch that a couple of times before you start clicking with it. But I'm glad we could take some time to discuss that, because it is a very, very important topic. NASDAQ's on fire, baby. Here we go. Very nice. We got a new sound effect, guys, courtesy of James here. He gave us a new sound effect. So check this out. Hold on. The name of this song is Take Me Higher. Okay, here we go. For anybody, I know people are going to ask, what's the song? Take me up, take me high. Dang, that is crazy. NASDAQ is ripping here, and I don't even know why. We'll give one more hype, and then we're going to go to Frank, see what he has to say about this. Check this out. Little hype song as well. It's so cheesy. It's so cheesy. I love it. Okay, guys. So we're going to take a quick break to thank our sponsor. Don't go anywhere. We're going to speak in just a moment with Frank on what is happening with the indices. We're ripping higher here into the Monday open, and we got more action coming to you guys in just a second. Stay tuned. We'll be right back.
Gentlemen, how are we today? I think someone turned off the lights here, but it's whatever. So you're here for a job interview, Mr. Nikula and Vlad?
I think we have a lot to bring to the table.
What is that, French? You guys from France?
Fort Lauderdale, actually.
Well, you flew in today.
Yes, the back window was open.
You guys traders? We could use some more help with managing the Discord.
In some ways, yeah. We want to be traders to your company.
We are very good at this sort of thing.
Did you just say traders or traitors?
Yes, traitors.
Do either of you have any background in this industry?
Oh, yes. Hundreds of years.
Look, I can already tell this is not going to work out. I'm sorry, but I love the capes though.
Trading can be scary. Need a safe space? Join the A1 Trading VIP Discord community. We have hundreds of committed traders inside sharing trade ideas, market news, and analysis, alongside our 4 professional traders. Join today with the link dropped in the chat or in the description down below.
Hi, I'm here for my 10 o'clock.
And we're back with Frank. Hey, Frank, how's it going, man? Oh, I don't think I can hear you. Is your mic muted? You can click the settings gear in the bottom on the StreamYard page. Go to audio. You can play with your mic. Make sure it's the right mic there.
Can you hear me now?
Oh, I can hear you, I think.
Hello?
Oh, yep, I can hear you. Hey, Frank.
Okay. Hey,
So why is the Nasdaq ripping 1% today?
Just because it wants to. No,
Okay,
I think
yeah,
there's earnings today. There's
I was going to say,
financial earnings. We have JP Morgan, Wells Fargo, I think.
oh yeah, I just pulled up.
Okay, Bank of America, Goldman Sachs. Oh wait, that's on Tuesday. I think it's just maybe it's optimism going into earnings, but
I do
we
know that,
have-
Frank, on Friday we had some of the reported banks were quite strong. Like you saw some really good optimism around the banking world. That's why the XLF, which was a financials ETF, a lot of the banks reported really uptick earnings, and that usually sets a good tone for earnings season, which is full swing pretty soon. We're going to start getting some reported earnings from some of the big companies, Apple, Amazon, Netflix, all those big names sometime pretty soon, right?
Right. Yeah. This week is financials. Nvidia, we can check when that is. But
It usually
they're
reports
they're
later.
probably far out. They're November.
Yeah.
Of the big tech, I think it's later this month. So what do we have? Apple.
You got Tesla
Yeah,
coming pretty
I think-
soon.
Tesla's always early. What do you think about Tesla, by the way? Because we saw their robo-taxi conference and their stock tanked, and I was kind of confused.
Yeah, I listened to a little bit of a debate about, Tesla and whether or not this was bullish or bearish. And I think that the critics of the event were basically kind of like frustrated that there wasn't any sort of clear updates on dates and deadlines and when things can be expected, when their economy car actually can be available to the masses. And so that made investors a little bit cautious because sure, there was some very cool things there, but the bears in the room would say, well, there's not a short term to any degree like turnaround on all this stuff and all this investment. When are we going to start seeing some earnings? Which is, typical Wall Street stuff. They want to see money right now. And, Elon Musk and Tesla in general seem more oriented towards creating like long-term stuff. And will it pay off? We'll see. Sometimes focusing super specifically on the long term can be a big win, but it also is a big risk because, of course, shareholders want to see returns in order to pump more money into the stock, which allows you to do more innovation and all that stuff.
Right. I'm looking at the S&P. We're up 0.75 already. So I don't know. We're at all-time highs. I still think upside is limited this week. We don't really have any news. I was doing a lot of bull put spreads, so I'm wondering now that we're at all-time highs, we have a good run up at the start of the day. Wondering if I may take a bear call spread at some point, see if I could call
Play
a
the
top
other
for
side.
the day, which it has been. I think that's harder than calling a bottom, at least in this market in the past couple weeks. But I think that how much further do you think we can run? I feel like the average move for the S&P in one day is like 40 to 60. So we've already gone in the futures, we're up 43. S&P is up 35 from the open, or SPX, because it's not counting the futures trade. But so we're up, actually it's only 18. So if we see a run up to like 50 or 5.8, 5.85 or something, I think we could probably look at a bear call spread. But I wouldn't want to take a bull put spread at this current level, because this is literally the highs. So
Yeah. And it's been crazy, Frank. I've been watching NVIDIA a lot because I had I don't know if I told you this or not. I had covered calls on NVIDIA, and I bought them back, which I bought them back for a loss, but it definitely was the right call because we're trading currently above the strike price, which was 136. So I did take a loss on those covered calls, but the NVIDIA position I'm in is doing okay. This thing has been such a beast. But I know you're also long Palantir, which, oh my gosh, I'm jealous of that. You've got Palantir trading almost at $44 a share. This morning it hit 44.40, which is awesome. Are you doing anything with this position? Are you gonna trim it at all? Or are you just gonna let this run?
I think I just want to invest in this.
Yeah.
Or actually add to it if I can get a pullback. I was saying, like, a couple months ago, it was hard to justify a $30 price target.
Mm-hmm.
That's kind of what I heard from different analysts. So I was kind of thinking 30 was the cap, but then they had their deal with Microsoft, the government contract deals, added to the S&P. Funds just have to buy the stock up. They don't really have a choice, so they can keep it in their
right?
in their accounts. S&P now, so it's almost a forced melt up. And at this point, that news is kind of old. I'm not sure how much further we're going to go. I think this rally right now could be led by retail, which would be, it's fine, but I think we have gone overextended in the short term. I think pullbacks are necessary, and if we're not pulling back, I don't really want to buy it. And I think 45 is a pretty harsh threshold. I don't think price should necessarily go above that. But I feel like the stock needs time, and I would hate to see it run up super fast and get away from all of us, and only to come crashing down really hard. I would like to see this slowly grind higher over the years. But
well, for your sake, Frank, I hope it just continues to rip hard here. And this was one I mentioned that I let get away from me. I was watching it for a while, Palantir, but I've got other things that are working quite well. The NVIDIA position, I've got a Google position as well, which is going well. So I'm not hating it, but that Palantir move, fantastic. Congrats on it. So let's talk something about this next couple weeks, Frank, too, because so a lot of people, I've been seeing this everywhere. As you just mentioned, this is what happens when things run hot for a little bit. A lot of analysts and people start getting really cautious. They say, oh, Palantir, price too high at 30. And then people say like, oh, NASDAQ too high here. I've heard a lot of people concerned about the election cycle and whether or not it will have some sort of big sway on the markets. I personally am not as afraid of that as I am this earnings season. I think that one thing we can point out about this market, Frank, is that we know it's priced pretty richly. You've got stock expectations for their earnings very, very high. You've got big expectations. The Fed is on our side, right? The Fed is cutting rates, and jobs data is coming in pretty good. So the economy and the Fed seem like optimistic things for the stock market. The one thing we have to watch closely is, are corporate earnings going to actually deliver on such high expectations? When you look at, NVIDIA, remember last time around, Frank, NVIDIA had earnings growth that was still remarkable. It was an earnings growth of 5%, which is still pretty good for earnings growth. And the stock sold off heavy on that, which to me showed me how much this market is demanding. And look at NVIDIA, which is, of course, the darling of the stock market. It's traded way up since then, and the earnings growth seems to have slowed. So I'm not bearish, and I'm not getting bearish here, but I do think, as you've discussed, like, get a little bit cautious when you're trading at these all-time highs, or for the NASDAQ, pretty close, the S&P clearly all-time highs. You got to be a little bit cautious because these things are really strong companies. They're making a lot of money. But just like, Apple is a wonderful company and everybody knows that, you can still overvalue and over-expect for these companies. It's like if everybody expects Alabama to win the football game, right? There's, for non-US people, Alabama's like, they've got like a long-term track record of being one of the better football teams in college football. If everybody expects them, that in the sports betting world, though. Yeah, right. That's fair. Actually, they didn't win, or they did win, but it was closer than it should have been, right?
They barely beat South Carolina.
Okay. James is going to be pissed at you for saying that, Frank, so don't say that. Anyways, just kidding. Shout out James. Biggest Alabama fan I know. I went to Auburn, so, whatever. Anyways,
Georgia's playing Texas next weekend, so I think we have a high chance of getting killed by them. I think they're the best team so far.
It's going to be a crazy one. So back to my question, though, Frank. So you've got NAS and S&P trading at these all-time highs going into the earnings season. Do you think that's a reason to just stay cautious and wait for pullbacks?
Yeah, I mean, if you look back in time, and we've done this too, like in real time, every time it dips by any amount, you're going to be fine. Like, we're at all-time highs. If you had bought at any point before this today, you'd be fine. So I think, honestly, the bigger the dip, which I guess would be like 1% to 2% as like a scarier dip, I feel like you can just buy it unless, there's something that fundamentally breaks here. I think that you see a red day and you're more likely to be profitable in the next couple of days with green candles. So even right here, we had consolidation for several days, but at the end of the day, or at the end of several days, I guess, it's back up to all-time highs. I think we have a slow melt up, and earnings just has to be fine.
Yep.
I can see certain stocks falling pretty hard if they don't meet all the expectations, because the expectations are so high. But I think that any sort of dip these stocks have is kind of just another opportunity. So I'm not bearish. I'm very cautious, but until something breaks, I'm not going to sit on the sidelines and miss out on all of these gains, because we can see this through the end of the year. And I think
and it can go on a lot longer than anyone expects. We know that from our time in the markets. The markets can just go crazy for a very, very long suspended amount of time. So, we'll see with earnings season if that is a catalyst for some downside. Perhaps, if you get misses on key earnings reports like Microsoft and Apple and Google and NVIDIA and all those, if there's any misses there, then they might create some dips. But Frank and I are clearly like leaning more on the bullish side, with, again, most things kind of in favor of the stock market for now. Now, again, there's a caveat here. These things can change. We're traders, so we're watching this stuff. If the Fed switches to the other team, meaning they're more on, rate hike side, or at least not cutting rates anymore, or the labor data starts coming in real bad, or if some of these story pieces change, as traders, the cool thing is you have the flexibility to adapt. But currently, it's kind of like let the bull run. Don't try and get in front of him and stop his horns. You're going to catch the horns. That's the old expression. So, with that said, Frank, we'll let you go. Thanks for hopping on. I know you're doing a service here this morning because I know you had a long weekend. So, thanks for hopping on the stream, and we will chat with you in a little bit.
Yeah, thanks, man. Happy to do it.
All right. See you, Frank. All right, guys, pushing on. Again, we got a couple minutes, and then Chris Pulver is taking over the show. So a couple things to think about here. So you've got stocks moving higher. Some people saying, why is this happening on what it was supposed to be a slow day? Well, the stock market's still open. U.S. volume is still there to a degree, but also you just kind of have to. If you're standing there getting like bearish consistently in this market, it's been tough. It's been a head scratcher, because if you're sitting there being bearish, let me reiterate what I just said to Frank. There will be a bear case at some point, but right now it's really, really weak. It does not mean that there won't be one, that we won't see a big correction at some point. But this is, as traders, you kind of just like spot the trend, you spot the identity, this personality of this market, which is up and away until further notice, until a crack forms in this story. I'm staying long. Now, what's gotten me so bullish has been the Edge Finder. The Edge Finder has been incredibly bullish recently on indices, SPX, NASDAQ, Dow Jones. You've got the DAX in there, the Nikkei, which is Japanese stock market. So you've even got Russell tapping into nearly bullish territory. So you've had some clear indications on the index side. If we take a look at the opposite side, the more bearish side of things, you've got Euro USD as a possible bearish setup. You got some Swiss franc pairs, Euro pound. Gold is in -4 territory, so still technically neutral, but close to a bearish reading. So if we take a look at Euro dollar, which is a bearish setup, this one's been one that I've been waiting for a pullback on too, but just have not been able to get that setup. Double top here on the daily chart, broke kind of this upward trajectory, broke through support. If we get a retest into that area, I was interested, but it's just been falling and falling without me. So haven't been able to take that short setup on that one. Can you look at US oil? Yes, I can. I do have a position currently on US oil, which is giving back some gains here this morning. I'm still bullish on oil until further notice. Take a look. Oil's got a +6 on the Edge Finder. The commitment of traders data, which let's pull that up. Let's talk about the COT report. So COT report, what is it? The COT report is, of course, a way to track what institutional money is buying or selling. It is a weekly filed report by the CFTC, and it reports what big holdings are looking like for institutional money flow. We've aggregated it out for our users who are Edge Finder users. You can see all of this data in our simple to use visualization tool. And I'm going to just go through this really quick. So in terms of the COT report, let's look into what institutional money is buying and or selling. Take a look at COT net positioning. We've got the Canadian dollar, Swiss franc, treasuries, dollar, Bitcoin, SPX. These are the more bearish end of the spectrum in terms of institutional holdings. And if we flip that around and we take a look at the more bullish side, you've got the South African rand, gold, silver, Dow Jones, and oil. These are some of your most bullish on a holdings basis. So what are we looking at here? We're looking at the overall contracts, long versus short, held by institutional money, tracked from the CFTC. Okay, so when we look at the net holdings, this is what we're met with. Now, that's one side of it, but there's more to the COT report than just looking at the net holdings. The reason I say that is because this data right here is really only useful to you if you're holding positions for months and months and months, because this data is slowly changing. Like these asset lists have stayed this way for months. They don't change that frequently, and they change very slowly. They climb up or down the ladder. Now that climbing component, that's where the COT report gets interesting. And we've built the change week to week table right here. This is the latest weekly COT filings, latest buys and sells from the Edgefinder's COT report. Now, this is where you want to pay attention if you are a trader. Now, if you're an active trader, this is showing you the change in contracts from the last week to the current week reporting. This is why it's so useful. When you're looking at this, you say, okay, look, the Australian dollar got some big bullish action. They added lots of longs. They closed lots of shorts. They reduced short holdings. They increased long holdings. We get a nice bullish net change. Okay, US oil. Take a look at US oil, and what we've got here is change in short contracts. They dramatically reduced short holdings on oil price, and they increased. When I say they, I'm talking about the hedge funds, small banks, big banks reporting funds to the CFTC showed big buying for US oil. Okay, let's keep going. Treasuries also got a bid. We saw a big increase in longs and a massive decrease in shorts. So treasuries reduced shorts. That's pretty big. Take a look at the Swiss franc. They added some Swiss franc positioning, added some Dow Jones, pound, Bitcoin, copper, silver. Let's take a look at some of the things that they sold. They sold some gold, right? So gold got some bearish activity. Let's take that into consideration. They added a little bit of shorts, but they dramatically reduced long positions. That is pretty bearish, right? So if everybody's closing out longs, that is something to pay attention to. When we are actively in this conversation, we are actually tracking institutional money. We're not guessing on what institutional money is doing through candlestick patterns, which I think is kind of silly. I think that this is the way better way to do it. You are actually looking at the CFTC's report of what institutional money did. Did they close positions? Did they buy positions? Did they initiate new positions? On gold as an aggregate, they reduced longs. They increased shorts. Okay, let's move on. SPX, NASDAQ, both of these saw a little bit of bearish activity. They added some shorts to SPX. They added a little bit of shorts to the NASDAQ. US dollar, Canadian dollar, platinum, Russell, yen, and Nikkei. These things mostly got sold on the CFTC's weekly reported numbers. Okay. So the Edgefinder, what it does is every week it updates and pulls this data. So you can see the last updated report was October 11th. So that data got pulled in by the Edgefinder and generated into these sheets. If you're not an Edgefinder user and you would like to try this tool out for 30 days, here's how you can do it. We'll drop a link here in the chat. It is not a free trial. It is a paid trial. If you're interested in paying for 30 days access to try out the tool, you can do so by clicking the link and applying here in the chat right there. So try out the Edgefinder if you're interested. If you're a serious trader looking to incorporate tools like this into your analysis, we're a small software company in Atlanta, Georgia. We build tools like this for traders to optimize their data intake. If you're a trader in this modern era and you're trading up against hedge funds and institutional money, and they've all got all these tools, if you don't have, powerful tools to assist you in your trading, it can hold you back. Some traders prefer to only use technical analysis. That's cool. But if that's not working for you, I highly recommend you come over to our side, which is looking at real world data that is impacting the markets. Why are they going up? Why are they going down? So if you don't already have the Edgefinder, click this link, apply for a trial. It is a 30-day trial. It does cost money. It's not free. But if you're serious about this stuff and you'd like to try it, your trial fee gets credited towards your final purchase. So it is not money lost. You get to try it and you get to get a nice discount on the overall tool. So click that link, apply for a trial. If you'd like to get access, you can start using this yourself every week. It is a part of my analysis. The best part of the Edgefinder too, though, is after it looks at the COT data, the algorithm generates bullish or bearish readings based on what the COT report showed. So as a quick example, Dow or US 30 has a +2 in the category of the Commitment of Traders report scoring column. That's just one of many columns that the Edgefinder is considering. Let's go look really quick. Why did it get a +2? Well, because look, the Dow Jones saw a bullish week, right? So we take a look at that, and that's kind of how that functionality is working. It's looking at the latest report and generating, bullish, bearish positioning. So again, NASDAQ was up like 1.2 this morning. It's come down a little bit here. SPX also a little bit of taking off the top. Really quite the bullish move here this morning on, bank holiday, which is kind of crazy, but it's sort of maybe just being a reaction to the financial reporting stuff that happened on Friday. There was some good, banks reporting good numbers and healthy state of the consumer is going to be really good for the overall market. If banks report good things, it's telling you good things about the economy. So perhaps that's a little bit of the reason why we're up today for NAS. What's the difference between large speculators and commercial traders? I noticed the edge finders based on the large speculators and the commercial traders do the exact opposite. That's a great question, Lincoln. So here's something to consider. I don't look at commercial traders at all because commercial activity in the COT report has nothing to do with speculation. It is simply hedging. Let me mention an example. So the reason we only look at non-commercials or large speculators in the markets with our studies here of the COT report is because commercial activity is not speculating where prices are going to go next. It is simply offsetting risk in their own companies or commercial activity. So let's say you're a gold mining company and you're out there mining gold, right? You don't want to be subject to the swing of gold prices. That your job is not to speculate on whether or not gold goes up or down. Your job is to extract gold from the earth and then sell it on the market. But if your costs are going to get, killed if gold prices plummet, like you're paying all this money to mine, if the price of gold plummets, you get really hurt. So what the futures market allows mining companies to sometimes do is to basically short gold to offset the price of gold as they're pulling out of the ground so they can hedge their positions. There's no speculation of whether or not gold will go up or down. What you want to track, and this is why we do it, is the non-commercials or large speculators, because that is hedge funds who their job is to speculate where the markets are going to go next. We track their activity. We don't track commercial activity. That's the importance there. So commercial activity, I don't find to be very useful. We track what institutional money, whose job it is to forecast, we track what their thoughts are. Because again, we find that to be a little bit more useful. Are they right all the time? Nope. But knowing generally where they're at is important. Okay, guys, we got Chris Pulver. Last thing I'll say is if you want to get access to the Edge Finder, I dropped it just a moment ago. Try out the Edge Finder. Click this link. It's just been dropped in the chat. You can also find it in the description down below if you're watching this live stream recording at a later period. So there you go. We're going to take a quick break here. Thank a sponsor. And then we got Chris Pulver taking over the show, guys. Stay tuned. He's got you from here.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below or click the link being dropped in the chat now to speak directly with a team member.
Hey everybody, happy Monday. Welcome back. I look a little disheveled today. We got back late last night, equivalent of 3 a.m. arrival, and get cranking this morning. And market's up a little bit, little pause. Had 2 trades, 2 winners this morning on the SPX, which was nice. We're up a little bit higher, no complaints. P&L's up on the day. I actually wanted to spend some time this morning reviewing, where we're at, top to bottom, bigger picture, and then also have a look at a couple of earnings plays this week. I was actually trying to pull a screenshot. I think I have one here. Earnings for this coming week should look something like this. Let me get a screenshot here and I'll show you. Here we go. The one notable I'm looking at is Netflix. Here's a screenshot. So United Airlines, Interactive Brokers. We have a lot of financials this week, which we kind of led with financials. Tuesday, we have Johnson & Johnson, Progressive, which has been at all-time highs. Schwab, Goldman Sachs, PNC. Again, financials, don't really trade those necessarily. Synchrony Bank, First Horizon, Citizens Bank Corp. I don't trade those. Abbott Labs, maybe, depends on the volatility. We'll see if Alcoa is in a good space for some aluminum love out there. But I was more looking ahead to Netflix on Thursday. That's after the close. And let's see here. Anything else? That might be the big one that I saw. A lot of it's financials. I mean, look at Friday. Comerica, American Express, Procter & Gamble's Defensive, Regions Bank, Fifth Third Bank, Ally Bank, Simmons Bank. So a lot of financials still coming in this week, which, as we saw on Friday, has the ability to show if it's green and it's good and it's optimistic. That's probably a good thing for a lot of stocks. That is good for the consumer. That's good for lending. That's good for the JNK, which is our junk bonds. Okay, and everyone says junk bonds. It's really just the yield difference between AAA's, B's, and C's. If there's ever going to be a liquidity issue in the markets, then usually this is dropping off a cliff. And so far, it's been pretty well contained. Surprisingly, we've gone down a little bit despite the market being at all-time highs, but the breadth has been pretty good. I took a look at the heat map this morning, and about 66% of stocks right now are above their 50-period moving average, and about 67.5% of stocks are above the 200. So we have about 2/3 of the market in a bullish trend, above the 50, above the 200. Obviously, we know we have some stocks out there that are sitting all-time highs and making new highs, and that's great. The market is a little bit more bullish, which I'm okay with. I mean, obviously, watching it melt up and watching higher highs in the portfolio is never a bad thing. But let's get back to some comments here. Let's talk some top to bottom. I want to take a look at Netflix this week. I think that's one big earnings report that I want to price in. So NFLX trading at 720. Looking at the implied move. So earnings is on Thursday, which means a couple things. I want to see what it would cost me let's take a look at what the market expects. So my market maker move for Netflix is on Friday's expiration. Market's looking at about a $54 move on Netflix. Okay. Now we have seen Netflix surprise to the upside. We've seen like $80, $90, $100 moves in Netflix, and that would be great if you bought a straddle or bought a strangle. That would be decent, but you need price to cover your trade and move a lot directionally. If it does, you're not capping your upside. I've traded a lot of strategies. I'm going to try to avoid going into earnings season this time around. I'm going to try to avoid deep in the money credit spreads, because if I get assigned, some of my cash accounts especially can get a little bit tighter than I want it to be. So anyway, last week on Friday, if you were following my Pulver Alerts section of the A1 Trading Discord, I did do some dollar cost averaging into a couple of, it's a pretty diversified ETF look. Charles Schwab just did a bunch of splits. And so SCHD is a dividend ETF that has performed about 12% annualized for the last, I think it's up year to date. Let me take a look at here. Year to date's up 13%. The last 1 year, so going back to like Q4 of last year, it's up 21%. 3 years still up 12%. Last 5 years, 57.5% plus dividends on top of that, which dividends you're looking at around 3 and 3.42%. But they did a split. This was I think a 3-for-1 or 4-for-1. 3-for-1 split. So this was trading in the 70s, $70, $80, and they split back to 28.57. So I bought some shares of SCHD. I bought some shares of SCHG, which is essentially large cap growth, which is also at all-time highs. I'm pretty confident that, yes, I know there's rotation that needs to go outside and broaden out from the Mag 7, but I also know that the Mag 7 is probably our moat in the U.S. economy. Google, Microsoft, Amazon, Netflix, Tesla, Meta, whatever, you name them all. They have to do well. NVIDIA, throw it in there. They have to do well. They are expected to do well. I just wonder if the market is ever going to think like, oh, they're not earning enough. And then the market kind of craps on Mag 7. But for the most part, it's like every large cap ETF is being bought by 401ks. Every large cap ETF and all this exposure is in there somewhere. It's always going to be a pretty safe bucket to be in. And so I'm going to buy this. So SCHG, SCHD, and then I also got into an FCTE. There's a guy out there that I follow. His name is Warren Pies. He's been awesome. I followed him for the last 3 years now. A lot of podcasts, a lot of consulting, but he just does awesome top-down macro research. And so he and his firm launched an ETF called Full Cycle Trend. So FCTE, they basically rotate in and out of 20 stocks throughout a 12-month period, and it's all based on performance metrics, momentum metrics, and they're going to rotate in to make sure that they're checking all the boxes. And in an uptrend, it would be essentially like this. And I'm kind of paraphrasing a basic strategy, but they're going to cycle through every different sector And anything that is up in a healthy bull market with good financials, and we pull back to find the 21 or the 50 or the 100, they're looking to buy dips, buy dips, buy dips, buy dips, and just stay in these full cycle trends. That's what they call it. So I bought some shares in that as well. So those are kind of set it and forget it. Those are dollar cost averaging. I allocated about 5% of the portfolio to that just to let it sit and run. And if it goes higher, great. And then I've got plenty of buying power to get more active in options, which is what I want to take a look at right now for Netflix. So I'll take a look at Netflix. Let's go to the expected move. We're looking at an average move of around 11.89%. We can see we've got some highs and lows. Sometimes it is above it, sometimes it's not. I think I priced this out or maybe took a glance at it last week, and we had about 5 times it was above the expected move, 5 times it was below. Okay. What is the ticker there, Andreas, for that? And Goshi, I'll take a look at euro dollar. Yep, we'll take a look. So I want to price out some Netflix here. At the top of the hour, do I have is Nick Phillips coming on at 11 o'clock? If so, I'll get through Netflix, kind of price it out. That's kind of the only earnings play that I'm looking at. Oh, 1810s. You're talking like, all right, what market is that? Is that a Chinese stock? Or is it Japanese? That's it looks like it's Chinese. Okay. I mean it looks a lot different than the Hang Seng, the Alibaba, Baidu, FXI, the stuff I've been following here, which has been good, bad, and different. JD's at 45. Oh, sweet. I might get JD called away. I rolled that out this week. This should be a good little income play. I rolled this on Friday. So right now, I think I updated this in my Telegram. Let me go to JD.com. I'll take a look at that 1810 one, yeah. So my JD stock, I ended up doing a roll last week. So right now, I would get them called away for $1.37 a share. If it stays above $43, I mean, I might get a little tricky and roll this one more time. Maybe not. I don't mind taking the money. So $1.37 times 500 shares, I'd make $685 by Friday as long as we stay above $43. So that's looking pretty good. K-Web stabilizing around that 30%. FXI stabilizing around that 30%. I mean, one high probability move would be something like this. We go low to high, we pull back to the 30%, we try to just get back to the high. I said this when this stuff started to take off to the north on these China stocks. If we get a bull flag, that's a good thing. A bull flag is a good thing. You know, it was a little weird to see it like rip the way that it did and then not pull back. But when it did, it pulled back violently. So the fact that we stabilized for at least a couple of days of trading tells me that we might be at least in some sideways chop, which in a bull flag setting is totally fine. Okay. All right. Let's take a look at that 1810. I mean, if you can buy it and you like it, I'll take a look at the snowflake analysis here. See if I can find it. See if it's even listed at 1810, or I have to type it in. 1810. There it is right there. So earnings forecast to grow. Says no risk detected. Snowflake analysis wise checks out, looks okay. Price to earnings, price to sales. Nothing that sticks out in a bad way. A little bit higher on the price to earnings. Let's see what its peers are. Okay, this is not a good thing. So this would be my only concern. Current price is $23.60. Fair value discounted cash flow model $6.43. So I don't like that. You know, I've never heard of it. I don't know what they do. What is the space? What do they do? Shows here telecommunications equipment. Strong buy says analysts. Strong buy says technicals. Smartphone hardware. Okay, so we got. Gotcha. Power Bank Pro, headphones, in-ear. So it's mostly, it looks like it's smartphones and smartphone accessories, and lots of them, and probably on the cheap. Maybe or maybe not. I mean, there's probably some more research I'd like to do. But if I see that, I don't love that. I don't like, current prices here and its fair value is 266% lower. So at a glance, I'd say that's my only drawback is if you like the stock or you're already in it, then hopefully you're just managing profit, because according to what this thing has cash wise and fundamentally, it looks like it should not be trading at 23.60. So it is making higher highs and higher lows. Take a look at these spots on the left. If we get up into the 30s, it's It's probably a good spot to be moving stop losses. If it blows it off, great. But if it doesn't, don't give back any profit. Okay. They even have an electric car. Huh. Okay. I've used their smartphones. They're great, especially for the price. That's good. Yeah, that's cool. So, I mean, just do some digging on the company. Do some due diligence there. All right, Netflix. Let me take a quick peek. So, 18, 18, 22, 17, 9. This is the one I'm a little hesitant on. Is having this only show like a 9% pop, and the average is 11.89. So conservatively, I would say if I did a 10% expected move for Netflix, I could probably price this out pretty cheaply and look at a probability of going 10% on earnings. And I want to see how many days it takes to go 10% on average. So let's look at 10% as the cutoff here. So how many times in the last 10 earnings did we go to 10%? And if I go 8 days out, let's see, 10%. So didn't get there here. We got to 9% here, didn't get to 10%, so that one doesn't count. This one got there within 1 day. This one got there immediately. This one gets there within 3 days. This one gets there not. This one gets to 15 on day 5. This one gets to 10 day 1. This one gets to 9.3, 12.6 day 8. 9.3 is close. Not close enough. Across that one out. And this one just cranked. So we have 1, 2, 3, 4, 5, 6, and 4. So I've got 6 yeses. Okay, so 6 yeses. That's supposed to be a check mark, and then 4 nos. Which means, there's a slight edge to at least hitting that 10% take profit that I want, or 10% move that I want. When I go back to my broker platform, Netflix was looking at about a $54 move by Friday. If I go to an extra week to the 25th, it's only going to move another $5. So there's a $59 to $60 move implied by the 25th. All right. So if I did the immediate knee-jerk reaction, we could see Netflix blow the top off. I mean, I could take a very easy trade here, just go directional. Let's see. What could I do? Am I willing to own some shares of Netflix? I think I would say yes to that. I am willing to own some shares. I still have that 111 trade, which if we have a huge drop to the downside, this is still an income play for me. So let me take a look at these Netflix plays. Netflix, go to trade history. And then I do want to catch some requests. I see ASML. I saw Eurodollar. I saw SoFi, Snap as well. Yeah, there's a lot of earnings. Look, we're going to have a ton of earnings in the next month. A ton of earnings. Okay, so let me have a peek here. If I just did a bull put spread, if I sell the 722.50 and I buy the 720, if I did, so the credit spread I've got to be careful of, right? Just if you're not comfortable taking assignment, or if the stock drops hard, the broker may assign me on that, and I've got to be prepared to work my way through the trade, which means I could still take the same loss, but as long as I'm getting $1.25, I'm basically doing a $1.25 risk for $1.25 profit. Another way I'd like to trade this would be, what would it be if I just did a bull call spread? If I buy this and sell this, okay? So I would pay $1.32 to make $1.18. Probability that we go up, I'd say, is somewhat high. If I wanted to move this higher, let me make this. We should at least see like a $50 move. I would think, I would hope. So if I did, let's go something slightly in the money. Let's do like a 7. Look at the deltas here. So if I go, this would be an out of the money call at a 7. We're trading at 720. So if I buy the 740, this isn't too bad. So if I buy the 740 and I sell the 742, I'm risking $100 to make $150. All price has to do is get beyond that by Friday, which is possible. Okay, let me see if I can move this up even further. So if I go up from 20 to 40, that's $20. Let's go up to 50. So now the spreads are a little bit different. If I go to 750, 752, it's going to cost me 85 cents to make $165 if price can move up towards the top of this expected range. So this is roughly a 2-to-1. Okay, so if I do this, if I win, I get $168 per contract. If I lose $82 per contract. From current price is 720, are we able to make a $54 move, which would put us up towards 770? And this is a Thursday after market, which means it's only Friday. Only on Friday can we get this trade to have to be managed for close, right? And if it's a long option like a bull call spread, there's no exercise here. If it's above it, I can make $1.80 per contract. If it's below it, I will lose that 70 cents a contract. So I think I like this trade enough to take it. Let me see what a 745 by 747 looks like. Make 160, risk 90. I'll make this pretty cheap. I'm going to do something like this. Pay 90 cents, make, what's that? Pay $1.65 to make 335. That's a little bit better. It's the same trade here. I'll just maybe go 2 contracts. So I'm going to take this trade. This is a I'm going to spend 87 to 88 cents on the trade. 85 cents would be great. I'm going to try to buy this right now. Okay. So I bought that for 83 cents, and I'm going to see if that will go to full expiration. Okay, so right there, bought that for 83 cents. Similar, I'm just going to get these in all the other accounts. 83 cents, 9732. Okay, and buying power is pretty cheap. It only takes up about $83 in buying power. Which account did I just do here? That one's in. That one still went. Okay, let me pin this here. There. Okay, so I'll update that in the pulver alert section. I'm buying the 750 call and I'm selling the 750-250. So it cost me 83 cents for a trade that should pay me out $1.67. Okay. So if I look at the mechanics on this trade again, max profits $1.67 if price is beyond 750-250 by Friday this week. My risk is $83. So I'm going to risk the full amount. There's no risk of assignment here because I'm long the option as opposed to short the option. I don't have any trade to the downside. If I were to flip this and say, okay, well, that is, $30 to the upside. If I were to do a bear put spread, if I went down to 690 here, if I buy the put and I sell the put, I do this one for, let me get out of here. So if I just do this separately, if I buy the 690 and I sell the 687.50, I pay 80 cents for that one. It's the same thing. Now let's do the math. Okay. So the math on this trade works out the following way. If I risk 83 cents on the call side and I risk 80, let's say 85 cents on the put side. So if I lose on one of these, let's just say I'm around both to 85 cents. So my loss would be 85 cents. Okay. If I win one side, I win $1. I mean, this is crazy if this is only costing me 50 cents. So I win $1.70 roughly. So I can basically take both sides of this trade. I can lose one, win one, and walk away with about a net 80 to 85 cents per contract, which isn't a bad play. But there is a dead zone here that if price doesn't go far enough lower or far enough higher, then I'm risking on both of these trades. And it's a manageable loss of, about $160 per contract. If it goes nowhere, if price stays nowhere. Okay. Now, the other thing that I could do on this trade, if I clear this out, I could also sell the 717 and I could sell the 720 and I could collect $57 a premium, but I could bracket these in. Now I need to see what the buying power reduction is. If I go to the expected moves, let me go to like maybe $60. So 720, 717. Let me go to the call side here. 717 go up $60. That'd be almost 770. If I sell that, so I buy that back. So that's the 717.50 call, and I buy the 770. What's the distance on that? 770 minus 7.7. That's a 52.50. All right, so I probably want to go a little bit higher than that. A little bit higher. A little bit higher. Maybe there. I'm interested in the buying power here. So that's about what, 90 to 17. That's $73 of potential volatility. And if I go $70 here, that'd be a 650. So I buy the 650 there. So I could take this and I could also collect a ton of premium. I collect $4,600 up front. Okay. But my risk is 2,650. That's a little much. I don't want to risk that much. Now I did this on Domino's Pizza and I was risking like $1,200 for a profit of around $2,500. And I took a partial profit and grabbed $500 within like day one of the earnings. But this is a little bit much. If price goes beyond my expected move, then there's a little bit too much risk on the trade. Buying power is a little pricey. It's 2407. Okay, so anyway, I'm going to keep the trading as is. I'm just going to go to the call side and trade Netflix that way for right now. Make it pretty straightforward. Do an in-the-money bull call spread. It's inexpensive. It pays out 2-to-1, and I'll just go to the upside and keep it pretty straightforward. Okay, I might consider a more diverse play here, but this one is fine for a little bit of upside, and that trade's fine. And the reason also is because I have this kind of 1-1-1 trade where if price does fall, I'm willing to own some shares in Netflix. Okay, so I'll get that updated in Discord here. I do want to do some top down. I got about maybe 20 minutes or so if there's guests coming on after me, which is cool. Okay. So let's talk. I saw euro dollar earlier in the morning. I saw some SoFi in there. Oil, gold, silver. We'll do the NASDAQ. Yep, we'll take a look at that. Okay. So here's the euro dollar. We're still looking at the DXY then, right? The dollar index. Dollar index is still catching a bid. And we're making consistently higher highs for right now. I am still wondering if this October zone is a pullback on the dollar into this inefficiency right in here. And at some point, this starts to turn. Okay. I'm still wrapping my head around like, will the dollar get stronger as the stock market's making all-time highs? Usually that's not the case. But could it happen? Yeah, it could happen. But euro, dollar, and everything else, I mean, look, dollar's been up and it's been stubbornly drifting and going higher. I don't like buying the dollar high. I don't like selling the euro dollar lower. Okay. I treat currencies very different than stocks. If stocks make new highs, I might not like buying all-time highs or new highs, but usually that momentum is so fierce in stocks that they just keep going up. Currencies are different. I never want to buy high or sell low in a currency. The only thing I'd be looking for would be some type of bull flag. So if this dollar is going to go up again, it maintains some type of bull flag posture. That looks pretty good. Same thing on euro dollar to the downside. That's going to be your biggest correlation. And we're just dropping from a range. And this is what I see sideways. This is the same thing as the dollar index. So if we're going to go equal highs, we drop and we, go sideways for a bear flag, or we have a little pullback here and then a lower low coming. Look, we might not get that. This dollar index might just keep moving and the euro dollar keeps dropping. But if we get back into this support zone, I wouldn't mind picking up some scooped up support levels on the euro dollar and just trading back into the range. We come back to 107, 106, 105. I wouldn't mind scooping up some euro dollar longs and just position it for halfway back to the range, all the way back to the range highs, and just try to trade the range on the dollar. Okay, pound dollar, I'm seeing that right now. Same thing. I mean, if you're talking about dollar crosses, what's your feel on the dollar index? The dollar index is bullish, and it's been bullish since we had that bear trap at the bottom. Pound dollar's looking the same thing. I mean, if I'm going to scoop up any pound dollar, it's either going to be high, low pullback, and then looking for a fresh low, or it's wait for this thing to be done and get exhausted and show some oversold conditions and look to see if this trend line will hold as support and then look to buy it. Get some confirmation down here around 28 or 2600, and then you look at some buy trades. That's about all I see. I'm not interested in like scooping up higher lows, higher highs. I want to see if the dollar can really play out this range before I get aggressive on the dollar. Okay. All right. What else? We saw the NASDAQ. So let's go Qs. Let's go US 100 or US Tech rather, whatever the CFD is. So we just broke above the September 26th high. We're not at all-time highs yet for the NASDAQ, but we're trying to. One thing for this week, this is the trend that I'm watching. We are in a pretty healthy looking bull market, if you ask me, on this setup right there. 50, 100, and 200. The all-time highs are right back here. I'm wondering if the market is melting up, pulling back a little bit, melting up, pulling back a little bit. The only time this would maybe consider resisting would be at these all-time highs from July, right? And even from there, as long as this trend line, I'll mark this in thick black here. If that trend line doesn't get broken by price, I think the NASDAQ still looks good for bullishness, postured bullishness, still momentum trying to go higher. So it's still catching up. Like the S&P is at all-time highs, the Dow's at all-time highs, but the NASDAQ looks pretty good to stay postured bullish. Okay, Russell. Let's go Dow for a moment. Dow is at another all-time high today. S&P, I believe, is at another all-time high today. So that's pretty good pushes here. I mean, you got to wonder if this market can just keep pushing through the election, through the end of the year. The Fed is obviously going to be looking at cutting rates by November, December, per the futures market, the watch tool. That's what it's suggesting. Probability is they're still going to cut by 25 basis points for November and cut. So that'd be one cut, 25 basis points. And then the higher probability is still a cut in December. And then we'll see what the potential pause looks like through 2025. Markets already made those adjustments into 2025. I think they're expecting about 50 basis points less in rate cuts. The yield market has still been pretty stubbornly bullish since the turn after September 18th. If you go to the 2-year yield, it's still turning. The 10-year up higher. The 10 and the 2 have bounced back up into this reinversion phase. So we were disinverting, getting towards the reinversion, and it's bounced back up. So interesting stuff. I don't know what the ramifications are for this outside of if we're going down, that probably shows a better job market. If we're going up, that's showing probably inflation. I mean, and we know this, like the PMI numbers have jumped up. CPI and PPI both came in hot last week, and the market's like, fudge it, let's go higher. It was for fundamentally, it was kind of a counterintuitive move last week, but it's not enough to derail the market. The market doesn't care right now about slightly hotter inflation. The market has destination, maybe 6,000 on the S&P, and if it does, I'm not trying to fight that. Okay. So anyway, we'll see how it plays out. Right, oil, gold, silver. Let's take a quick peek at that. Let me get rid of my moving averages, and then if we got some other stocks and stuff that I missed, I remember I got the NASDAQ. We just took a look at that one. SoFi, Snap. Take a look at those. That's fine. What else? SoFi, Snap. I think I saw an A. What else? Was there like a semiconductor in there somewhere? Yeah, we'll take a look at gold. All right, so oil. Oil is being pretty stable. 74.23, pretty stable. I'm not buying oil right now. I'm out of my CL positions for futures. I'm just going to let oil do its thing. I think that really oil is just going to serve as a barometer for inflation. If oil's up, inflation is going to suck. And it's going to come back in a way that nobody's going to enjoy it. And it's going to possibly, be something that threatens the economy, threatens the slowdown, threatens stagflation. All these things become a reality. But if it just kind of bounces around here and stabilizes around 60, 65, it's just support. If we break lower, okay, cool. Inflation is probably trending lower. Oil prices are dropping off a cliff. What do commodity prices do on top of that? But is it going to cause more concern in the Middle East? There's only 2 countries that love oil at cheap prices, and that's Saudi Arabia and the U.S. Everyone else is not wanting to see lower oil prices. Okay, gold and silver. Gold, not quite to all-time highs. I still want to see if gold can pull back a little bit. I hope that it can. 50, 100, 200. I'm still waiting to buy some dips on gold. So I'm just going to be patient, see if this will roll over a little bit. Dollar's been getting a little bit stronger and still pushing higher. So I'd like to see if gold can continue to drop a little bit. Silver, I still like silver, holding this structure, break the trend line. I know it's right back up here at these resistance levels, but if we're just breaking and accumulating, then hopefully there's more upside here on SLV and SI for futures. Bitcoin, holy shnikes, we got quite the run on Bitcoin there. 58 now to 66. Take a look and see how these correlations are happening with the ETFs. BITO looking a lot better. I've got an income play here. The 16 and 15 puts that are looking pretty darn good. I might actually look at this right now. Let me see if I can do BITO. What's this going to cost me if I buy a leap? if I go out to January 2026 and I want to buy an in-the-money call, this is not bad. I can buy a $14 call for $5 and see if this thing can revisit highs all the way to $33. So that put me at a break even of 19. Okay, if I go from 19 to $34, let's say we get to these highs at 70%. I can turn that option contract. Let me do some math here. I will essentially turn this into 100 delta. And if we go from 14 to 33, that's a $19 move, okay, on a $5 debit. So do the math on that. If I have a $19 credit and I paid $5 for it, that's a 380% return. That's not bad. And that doesn't require Bitcoin going up 380%. That's just using an option chain and using leverage. So I think I'm going to take this trade. So I'm going to go out to January 2026. I'm going to buy a deep in the money call at $14 for $5. And I mean, just one call option's fine. 2 would be better, but then I'm risking $1,000. But I'm going to go out and buy this bad boy. So if I turn, $500 of risk into, that would be, what's my net position here? So if it turns into $19 minus 5, I'm at 14 divided by 5. That's a 280% return. So I could take a $500 risk and turn it into about $2,800 of profit. I think I'm comfortable doing two contracts here. Gary Goodman, did you not get out with me earlier this morning? Both of my trades, they were out in session. Or did I update them like right after the session? I thought, anyway, I'm glad. I mean, price has been cooperating. Yeah, that was good. Okay, so I'm going to do this call option here. I'm going to do 2 contracts. 2 contracts, BITO, $5. I'm going deep in the money. I'm buying a 90 delta call at $14. That puts my break even right around current price. I'm going to buy 2 contracts. So let's go here. Filled at $5. $5. Regular price, $5, $5, $5, $5. Is that a Little Caesars commercial? Anybody? Just kidding. All right, getting these filled. Okay. So 1, 2, 3, 4, 5, 6, 7. Hang on a second. These should all be filled. This one get filled? Filled at $5. Filled at $5. 2. That one didn't get filled. BITO. Long the shares. Huh. Okay, all right. So let me try this one. And put this one in the accounts there. Ah. 585? That's way off. Jeez, that thing jumped up 85 cents. What the heck? Well, that's a big difference. I'll let that one just sit at $5 then. There it is. Got filled at $5. Well, that was easy. Okay. So I've got 2 trades to update for today. I'm taking a bull call spread on Netflix. I'll get that in the stock options trades. I'm taking a long call on BITO at $14 out to January of 2026. So I'm going all through, and this trade doesn't have to take all the way to January 2026. If we see a big appreciated move in Bitcoin and this instrument starts to get back up to these highs, that's good enough for me. We can turn this into a 280% gain right there. If it wants to go higher, it's uncapped. There's no profit limit on it. So we can protect profit along the way, but I want to see if this stock price is going to go nuts. There you go. Good. Pulse is filled at 484. Good. Very nice. Okay. So let me add those into the Pulver Alert section. That's a Netflix trade. That's a BITO trade. I added in, if you saw those last week on Friday, I added in SCHD, SCHG, and FTC or FCTE. And I'll see what else I can find this morning. But we'll go a little bit longer here. CONL, I take a look at that one. We looked at gold, we looked at silver. CONL. Granite shares. I don't even know what this is, but let's have a look at it. Is this an ETF? Yep, this is an ETF, so I don't have a fundamental analysis piece on it. What does it do? Investment trust mutual funds. No thanks. Year to date, it's down 18.34% in a market that's been going up. Now, I don't know what the purpose of this is. What are they good at? Why are they getting their butts kicked for 2024 when everything's been up? I mean, sure, maybe it's a value play. This says deliver 2x the price return, less fees and expenses. Okay. For a single day of Coinbase stock, purchasers hold shares longer than a day. Will need to monitor, rebalance their position. I'm already saying no to this. Personally, there's no way I'm going to trade a 2-3x leverage instrument. No thanks. The only time I'm doing that is short term. I'm talking about days at a time. That's it. Like single days. I'm not that interested in something. Yeah, I'm not in it, man. So if you want to look, I wouldn't mind just trading Coinbase. Coinbase is totally fine. I don't want to trade leverage ETFs on anything. Okay. I don't want to trade leverage ETFs on Amazon or Nvidia. And that was actually one of the big developments this year was, hey, people like Nvidia so much, let's create a triple leverage Nvidia. And so they did. And I'm sure people have made some money, but when you have Nvidia had like a 30% pullback, didn't it? Oops. Nvidia. This high to low from July, Nvidia pulled back 35%. So those double leveraged instruments pulled back 70%. How do you think traders like that? Do you think they panicked? Most did, probably. So I don't like that stuff, man. Just my thoughts. I don't like the double, triple leverage. Plus, you can never control how they get repriced, and they're usually not to your advantage. So I just stick to the single leverage, stick to the underlying, try to trade options on them. All right. I think that's about it. Today the market's looking okay. 0.6% in the S&P, 0.6% on the Qs, 0.14 on the Dow, but also at fresh highs. The Russell's up 0.3, which outperformed on Friday. The Russell's up over 2% on Friday, and we're pausing a little bit. I do like the Russell. I do have some credit spreads pending on the Russell, and I'm still looking at the kind of the pullback windows here. So if this is a pretty good sign from last week to see that. If we have a break, maybe a pause, more upside coming. I wouldn't plan on like a lot of crazy good order flows unless earnings is really solid or we see that the election is a bit of a non-event and very supportive of current prices and current direction. Okay, DEO. I have no idea what this is. Another stock that's getting its butt kicked for 2024. It is down 10% over the last year. DEO. Debt net well covered, pays reliable dividend, trading of below estimated values. Okay, let's be the judge of that. Price earnings, price to sales, not expensive. Current price fair market, not bad. 45.8% undervalued. Look at some peers. It's 19.1 price to earnings, peer average 36.4. So it's pretty well undervalued, which is not a bad thing. I've never heard of the stock. Is it liquid? Is it something we could trade? I look at it right here. It's already come back down to retest. It's not there yet, but we had a bottom. Looks like that August 5th bottom, right after that was a decent low here on $120. I would be willing to hold out in a stock like this to see if it was able to come back to the COVID levels. It might be, I don't know. If it was 120 down to the COVID low, maybe it's worth taking a stab at it if I could trade options on it. So let me see if there's options on this. DEO, common stock. You're trading monthly options right now, which isn't super liquid. and it's not. I mean, I like a little bit of tighter options and much better bid ask prices. So right now, if I went out to just do like a standard credit spread at like 45 to 60 days, I can do December. If I do a bull put spread, we've got a $5 wide. I get $1.83 for it. Not my favorite. Open interest wise, it's very quiet. These open interest contracts are tiny. So it's not a super liquid stock if you're trading options. If you want a dollar cost average into it, I don't think that's a bad play. If you really like something, I would just look to see, okay, well, if we put a little bit in here and a little bit in here and a little bit in here, is this stock good enough fundamentally to turn the corner? Right now, there's really no technical signs of showing bullishness. It seems to be somewhat of a good value. We've turned at 120 up to 134, but the first thing I see is this COVID low, and it's like, well, see if we get there. I buy this thing at, $110, $105, $100 and see if it holds that COVID low. Then there's some upside. But until then, I don't see anything about the stock that looks that attractive until we break that trend line. Okay, good. Francois says get out profitable this morning. Very nice. Yeah, it should have been, 1 for 1, 2 for 2 this morning on DPP. That's good. Okay, everybody, if it's after 11, I might have to bounce. So I'll let you go for today. I'll get the Pulver Alert section updated in A1 Trading. Netflix, bull call spread, BITO long call. That was a 90 delta. And I'll get those screenshots and everything added in and tag everyone on that. And thanks for being with us today. And we'll see you tomorrow. All right, thanks. Bye.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.